Okay, guys, we're about to get into a very important topic. We're about to cover the breakers. I'm pretty sure you guys have came across breakers on social media. If you guys been trading ICT, of course you done seen his definition of what a breaker is, things like that. To my understanding, from what I see on social media, a lot of people have the misconception of how to actually utilize a breaker. They don't know the power behind it. I think a lot of people sleep on the understanding of it. And I'm going to bring that to your attentions now. We're going to get in some very important topics pertaining to the breaker, like which breakers that you should be trading, which how to measure the strength of a breaker, and how you can implement it in your everyday trading strategy, and how I also utilize this in my everyday trading strategy. So that being said, let's get to it. So for video purposes, we're going to use the bearish breaker block. So having an understanding of just buy side liquidity and sell side liquidity, just that's kind of the basis of what moves the market. Buy side takes sell side takes buy side, and that's what triggers the market to go up, down, and just things like that. So that being said, the definition of a breaker, this is the actual term, SMC, which is basically is a bearish breaker is a range or down close candle in the most recent swing low prior to an old high being violated. The buyers that buy this low and later see the same swing low violated will look to mitigate the loss when price returns back to the swing. So that being said, I have a I have a picture that I actually pulled out of the charts, and I want you to focus on the highlighted areas I have, because those areas are going to identify the power behind what a breaker does. And I also want you to focus on the stops. And that's like the essentially the main thing that I focus on when I'm trading every day, as far as manipulation, trap traders, and things like that. So let's say right here you will see where it's more so about like neutralizing stops. So at this stage, breaker starts, comes down, create a turtle soup. And when it creates this turtle soup, this will be the first stage of what a breaker looks like. It's of course it takes out these stops. We understand that, like we said before, buy side, sell side, it neutralizes stops, and then it actually come back and it reprices. That's kind of how price works. So at this point, it neutralizes those stops, and then it continue on down its journey. When it come down here, you have stops that reside right here. It collects these stops too. Well, it enter people in at certain areas, but the actual stops will be taken out whenever price retraces that back into the breaker. When this happened, you have people that then go long, capitalizing off the situation of the trap traders that's inside this area, and then it just sells off. Now, in that case, I want you guys to just think about the trickery of what's happening inside the market. We got here basically people try to get in positions going in the upward direction, and they're not letting you go. So it's been many times where you guys have got inside trades, and you realize that you try to hold on to that trade, and that's where this stage happens, where it retraces down and just go against your stop loss completely. You're completely wrong. And it happens a lot. When I first started trading, it happened to me plenty of times. But just understanding that's basically what a breaker is more so a in from my definition, what it is it's more so a market structure shift, like a reversal pattern, and it's a strong pattern because it literally trap buyers in the market. In this case, it's a bearish breaker, so it trap buyers in the market, and it just completely go against, the retail trader's perspective. So we're going to get deeper into breakers, and we're going to really like kind of fine tune you guys on what you should be looking for when you actually identify these patterns. So every time I get into a concept, I'm going to give you an example. I'm going to give you an engineering price example. And what this is I think every concept should be broken down this way so you guys can understand the inner workings of what's happening inside these concepts. So today will be the breaker, of course. So in a breaker, what you got to understand is at stage one, when price come do this is essentially a turtle soup. It's a rate on stops. This is the first thing that triggers buyers to actually get inside the market because you have stops here. You know, these stops are neutralized and then price reverses over. So now what you're essentially looking at is you have people who potentially will want to take advantage of this breakout trade. So what traders do is they set entries here where they can get in and ride the trade up. As we both know, like the last slide, that breakers tend to go against that and it trap the buyers inside the market. And like I say, this is a bearish example. So in the case of this happening, it takes out these buyers and it traps them in the market. So the average retail trader has lost and the market makers has won. So at the end of the day, just understanding the first stage of a breaker, you're kind of seeing how the market makers manipulate engineer price to be able to trap people inside the market. So that being said, let's get rid of all that and continue on to the second stage of a breaker. Now we both know that the second stage is when it actually breaks the low. And this is where most people see the reversal pattern happening. You know, people spot it around this, people spot it when it does something like this. This is when most retail traders actually take notice of what the breaker is about to do. And to be honest with you, the advanced traders understand that breakers form up here. So just take notes on that. I'm trying to get you guys to the point where you can understand that these concepts happen. You want to catch them before they happen. So you got the retail traders that know there's breakers down here. And you got the more advanced traders, the more experienced traders that understand that breakers form up here. We understand the formulation of them, but before they actually happen. So that being said, let's just continue on. So of course, down here will be a low. Stops reside here too. So price initially neutralized these stops that reside below here. Price then comes back, rebalances, then distributes. Just that simple. And as we know, at stage two, the retail trader has lost, and then the market maker has won. Now, the thing is, sometimes you guys have experiences. I know you guys have experiences because I have in my trading journey. When you guys spot these breakers, so say the average retail trader see it here. Breakers trade up. You're like, oh, it's going to go down, and it don't. It just continue going up, and it takes you out. Now, the thing is, this particular video is based on how to know which ones you should be trading and which ones are the most powerful, which breakers are going to hold. So we all have been in a situation where we simply identified a break on the chart. We wanted to actually go down, or we're taking a sell position, we're going to take it above here, or sometimes people go above here, and we want to ride it out. And for some reason, like I just showed you guys, price takes you out. So the thing is, this is what we're going to get into. It's two ways you can actually trade a breaker. One way is this. You trade, get in up here. And when it breaks this low, you can get out. So you get in up here, and you get out down there, right? And you're like, well, how can I take advantage of a trade that happened that fast? you have to understand that the way that you've been looking at the market when you identify these things, like how ICT teach them, like, oh, it's just a breaker. You have to be ahead of the curve. So you got to be one step ahead of the typical trader. If you're at a stage where you identify that there's a breaker right here, when it's right here, then you should be understanding, like, look, I need to level this up. I need to start getting ahead of the curve and understanding when the breakers come up here. So we're going to get in deeper into the mentorship. We're going to get into like how you can actually enter in at this point and ride it down for profit before it even decide to come back and retrace. So that's one way you can get inside a breaker. And the other way you can get inside a breaker, of course, is the traditional way, but it's very strict. Like lower time frame concepts have to be in confluence with it to be able to ride it out. You know, like having that extra confirmation, not just getting in because it's a breaker. You got to actually know. You got to actually see price react from certain areas inside the breaker zone, so you can actually get confidence in taking that breaker. So those are the two ways that I have seen successful entries on breakers. And also those are, I'm sorry, this representation is just basically a good breakdown of how the breakers engineer price. So let's continue on to the next slide. Measuring the strength of a breaker. This is how you measure the strength of a breaker. 1, higher time frame. 2, the most recent. So therefore, meaning when I'm looking at my chart, this is how, like, this is, I'm at that point now where when I look at my chart, I can identify what a breaker is on a higher time frame, lower time frame, and I see it. When I see that breaker, I visualize the momentum of the market. I look at it as what the market is intended to do. You know, it gives me that institutional footprint to let me know, like, all right, this is what the institutions are pushing price in this direction. So it helps me with guiding my overall bias about what the market is doing. So the higher time frame breaker, the higher the time frame the breaker is on, the stronger that breaker will be. So therefore, meaning if you spot a breaker on the 4-hour time frame, I'm going with the bearish direction below that. Anything that's below 4-hour time frame, I'm running with it. So if I find a breaker that happened on the 1-hour time frame, which is going bearish, and I'm also finding a bearish breaker or any type of like bearish bias, it strengthened my confidence that the market is going bearish. So anytime I look for, anytime I pull up a chart, the first thing I will identify is where are the breakers? Like, where are their breakers, you know? And then the next thing I look at is on a 5-minute time frame, I just kind of get way more fractal with everything and try to figure out like what the intention of the market is gonna be. And then the next thing would be most recent. So the most recent breaker, that give me a certain type of like mind to think like, all right, yes, where the higher time frame breaker has worked. It's what I intended the market to do. But if I find a breaker that's on a lower time frame that's going in the bullish direction, I may change my bias only for that session. So therefore, meaning, and we're gonna go with some live examples, but therefore meaning like if you spot a breaker that comes up like this on a 4-hour time frame, then I see a breaker that happened like this on a lower time frame going upward, my bias will then change to take an entry right here to ride it up, right? So that's kind of essentially what I'm trying to say when I'm measuring the strength of my breakers, the higher time frame and the most recent. This helped me out a lot. Guys, just back test this and it will literally level you up as a trader. So which breakers should I trade? The first thing you should understand is timing of the breaker and then concept. So these are the two how can I say, the two difference makers of which traders that you should trade. Which breakers you should trade. So for one aspect of it, you look at it as time. The only breakers that you should be trading are breakers that happen in time zones, kill zones, just a certain particular time. Now, whatever your trading strategy is, you should have a robotic mindset, a mechanical way of trading that actual breaker, and it got to be at a specific time. That's one of the ways you can measure the breakers you should be trading. And then also concept meaning every breaker have a different identity. Think of breakers as human beings. We all kind of have the mental understanding of what we are, but we all have our own identity. You know, not one person on earth is the same. So think of breakers the same way. Sometimes you're going to run across breakers that don't that does not, you know, that does not close the fair value. You might run into breakers that may ride all the way out and overextend themselves inside the deep range before selling, before the distribution. You might have breakers that essentially may be just a typical breaker, come back and rebalance. Just understand that all breakers aren't the same. If that was the case, we all would be successful traders. It'll be easy to trade them. So you got to then mentally decide which ones are best for your actual trading strategy. Like you got to separate the different identities. You know, you gotta get good with just trading one. You know, just trading one of the identities. You can't just trade all of them, because it's going to then put you in the area of confusion with how to trade them. You know, you might have a person, which is weird. You might have a person that, I won't say weird because everybody's way is different, that come up here and trade this. Like I've seen different ways people trade like their actual ideas of what it is. And don't get caught up in this is the terminology, what it is. Don't focus on the terminology as much, because it doesn't really matter if you're profitable. What matters is you have a certain way you look at the market and it works for you and it's getting you consistency, and you clinch on that. You clinch on that. As you can see here, when we're talking about timing, London session and New York session, which is the kill zone, London kill zone and New York's kill zone. So just imagine right here we have a breaker that's spotted right here during the kill zone hours of New York. That breaker that forming there would be the breaker that you should be trading. And of course, also have to have the concept that you actually look for, and and that's how you will take advantage of that actual trade every day. So I'm going to show you guys some like examples. I'm going to show you guys some examples of what I'm telling you about particular breakers. Now, that being said, we're going to find some breakers. Breakers happen every day around the same time every day. When you back test this, you're going to see for yourself. But the main takeaway before we get into the live markups, I want you guys to understand that just because that these things happen every day does not mean that you should be trading them every day. No matter how sexy they may look, sometimes the market condition does not meet. It does not be a good condition for you to trade. You're going to see them every day. And now that I showed you this, trust me, you're going to literally see these things happen every day. So let's get into some chart work. Today is the 31st October. As you can see, this is today's price range. We have an overextended London. Now, so just for the green, like for this video purposes, the gray is Asian, blue is London, and green is New York. Right? So that being said, we're going to move forward. We're going to get into well, the topic at hand, which is identifying the breakers. As you can see here, if you look at the London session, you see a breaker that's formed right here. You know, so let's do this. You see a breaker formed right here, right in London session. Can anybody see it? I'm gonna mark it out for you. See that? Rate on stops. Buy side broke. Market structure shift. Price come back. Rebalance. Distribute. You see that? That was in London session. Okay. Let's continue on. Find more examples. You see the breaker? Before I annotate my screen, do you see the breaker? As you can see right here. Price in New York neutralized the stops. Market structure shift. Rebalance price. Distribute. The New York breaker. Just find more examples. Do anybody see the breaker here? Here in New York. Go ahead and hit the screen. Let's get into it. Boom. Price neutralized stops. As you can see right there. Market structure shift. Right there. Retrace. And as you can see, the breaker didn't really hold up as much. And I say every breaker is not the same. Some have different identities, but just understanding this is going to fine tune your lower time frame like mastery. You're going to understand a lot of these things. So let's keep going for more examples. That's how many days in a row? 1, 2, okay, 3 days in a row. Also, you can also find lower time frame breakers. Okay, let's see. Not really a well-defined one here. I'm not going to try to force it. Can you spot the breaker on this one? Right here. London session. London session breaker. Stops neutralized. Market structure shift. You don't get a deep retracement. You don't get a rebalance of price. We just get distribution. That's fine. That's fine with us. Anybody see the breaker here? I see 2 of them. We got rate on stops, market structure shift, Asian range with market structure shift, or you can say, sorry, right there. Market structure shift, trade up. So rate on stops, market structure shift, rebalance price, distribute. Same thing goes for New York. Rate on stops, market structure shift, distribute. After the rebalance, I'm sorry. Rate on stops, market structure shift, rebalance price, distribute. So that's enough examples. As you can see, it had like this is like 5 days in a row. Well, almost 4 out of 5 days. So understanding the breakers give you an edge to understand how to fine tune your entries on the lower time frame. And we're going to get deeper into these topics. We're going to keep on scolding you to be able to identify a certain price action, because this whole mentorship is about being surgical with price action. And this is like one of the building blocks that's going to help you become that. And a key gem too is if you understand that a breaker, like this is the power behind what a breaker is, and this is something that gave me an aha moment. Just imagine a higher time frame order block. So imagine a higher time frame order block. Let me give you an example. A higher time frame order block. So, okay, we got some examples, right? We just pulled up. So, like right here, this will be the 24th. This will be the 24th. And I'm going to show you something. This gave me an aha moment. We're going to hone in right here on this London breaker, right? Let me say this breaker is not the best one. It didn't reprice. We understand that it doesn't matter, right? We know that now. After watching this, you want to know we don't care about whether it repriced or not. It's more so about identifying it and then how we're going to be able to utilize these moves in the market, because we can't react to the market if we don't have an understanding. So the whole base thing is like reacting. So we don't care for it to actually do what we wanted to do. We just more so going to do from what it already did. We're going to work on what the market is doing. So that being said, you see that this blue section is London section, and we strongly identify a breaker. Now let's go to a higher time frame. Let's go to a 15-minute, and you will see what I'm telling you about right now. See, on a 15-minute time frame, what does that look like to you? An order block. See, that's the order block. 30-minute time frame. Order block. See, you see order block? Can you spot it? Let me get rid of all this. Can you see? It's just the order block. And we both know that order blocks are institutional footprints. See that? And that's why breakers are very powerful. People think order blocks are powerful all around, but they're only powerful because the built-in system that the breaker blocks are doing on a lower time frame. Since you now understand what the order blocks are, just breaker blocks on a lower time frame, you now understand why order blocks are powerful. And we both know that order blocks been this trading's like, foundational concept. But a lot of people don't understand that order blocks are just breaker blocks on a lower time frame, and they're strong because what we spoke about in an earlier session of the video. So that being said, let's get back to our markup. So now let's continue on. A breaker is a high resistance liquidity run. So before I get into the key, I want you guys to understand this about high resistance liquidity runs. I don't know if you guys know what high resistance liquidity runs is, but we're going to get into that too further into the mentorship. But I'm just having a little crash course. A high resistance liquidity run is more so essentially liquidity that takes a lot more power to be able to be taken out. Like, we know what low resistance liquidity runs are less resistant. So therefore, it's going to be easier. Like that's the path of least travel. You know what I'm saying? Like it's not a lot of resistance to that actual direction. With high resistance liquidity, it's a lot more resistance. So therefore, it's harder for price to take out a breaker before it is to actually take out low resistance liquidity run. So here go a key takeaway. Breaker blocks are institutional footprints, right? Because I just showed you how. That allows us to understand where price is going. Identifying breakers on our chart aid us on formulating an intraday bias and surgical entries. Breaker blocks are order blocks on a higher time frame. Order blocks serve as institutional footprints. Key takeaway. And essentially, the market is based off this. And I'm going to 8 on this. That's all you see. Don't let it go over your head. This is all you see. The market is, this is how the market moves. And of course, there's more concepts in between here, but we're going to get more into that later. But just for now, understand that breakers are key aspects of turning points that we can fine tune and take advantage of, because we want to take advantage of those moves so we can be able to ride them out. Homework: look for 3 breakers located in London session. 1 to 5 a.m. Or you can find New York session breakers from 7 to 11. Make sure you drop your homework in the homework section of the chat. And I'm out. See you next time.